Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? We've had an interesting week so far, right? On Monday, what was that? DeepSeek, it came out and it dropped the market really hard, especially the NASDAQ. Well, it didn't even drop the Dow. The Dow went up, but the NASDAQ went down like 700 points. But then on Tuesday, we get a little rebound. About 50% of that came back like it didn't even happen, right? Nobody knows exactly what's going on with DeepSeek. Is it real? Is it not real? Is it going to knock NVIDIA off its pedestal? Maybe it's a possibility, right? Okay, so we got the NASDAQ. Now, did the NASDAQ top out back in December, right? We came up, but we never took out the December high. And now with this DeepSeek sell-off, maybe the NASDAQ has already peaked. That remains to be seen. But the S&P now, that's made a new high in January. But this is all starting a topping pattern, right? You've seen the Russell, it topped out in November, right? And maybe the NASDAQ topped out in December. Now the S&P's made a new high in January, and it'll probably top out somewhere in January. But I actually think that the S&P will get pushed to a new high still, even from here. Anyways, it's never done any real harm. Came down to the 50-day, and then we bounced right back off of it. Well, if we can't get below the 50-day, I think they'll continue to push this higher. I look at the HYG, which is the junk bonds. Junk bonds didn't sell off at all, but of course, I believe that the Fed was in buying the junk bonds, buying the regular bonds. You can look at the TLT, look at the junk bonds. They were going up when the market was coming down. Now the junk bonds is going to lead the market lower. So you can look at the HYG, and if that's coming down, then the S&P is going to come down, but that's not coming down yet. So I do think we're going to get a higher high on the S&P. I think we'll get it up to around 6,300, maybe even a little above that. I think there's one more push left in it, but I do think it's probably going to end this month. This is a topping out pattern as we bring in what I would call the next bear market. Now, I know you young people don't even know what a bear market is. We've been going straight up, for, I don't know, 13, 14, 15 years. I mean, it's just nothing but straight up. We've only known bull markets. Well, there's going to be a bear market. It's probably going to be the worst one that we'll ever see, well, in my lifetime for sure. But maybe it brings us down and brings us into the recession, which I believe we're already in, but maybe it brings us down and brings us into a depression. Now, today's Fed day, that adds some more excitement, some more fuel on the fire, but the Fed's not going to do anything. They're going to leave rates unchanged, but that's probably a mistake. Well, there's so many things wrong right now because the Fed is trapped. They can't get out of this mess, so they don't know what to do, so they're just going to leave them unchanged. Now, when the markets start falling, you're going to see emergency Fed meetings that are going to cut the rate by a whole 100 basis points at a time, maybe 150 basis points till it gets down to zero. And they may even have to bring it to negative numbers. Now, you see, here's the thing. You see, what we got right now is they got rates, I don't know, what are they, 4%, let's call it, and they're saying inflation's 3%, so they're saying that there's 1% of real interest rates. Now, if you measure inflation the way they did back in 1980, it's still up above 10%. But let's call it 8%. Let's call inflation, let's call it 4%, 3%, whatever you want. But that's a negative real rate of return. You see, they're giving you 3 or 4% on your bonds, right? But inflation's eating away 8%, so you're losing 4% a year. Now, you do that for 10 years, you lost 40% of your money. You see, the Federal Reserve has a big problem right here. They should be raising rates, but they can't because they see the inflation. It's going to be coming back. A lot of people say we're going to go to deflation. That's a possibility, but as soon as we start to deflate in the stock market, in the real estate market, what are they going to do? They're going to print money to try to raise it back up. Now, I listen to a lot of podcasts because I'm kind of a little, I don't know, maybe I have a little bit of a sick mind that I'm obsessed with this stuff, right? I mean, I love to listen to other people's opinions. Now, a lot of people, they don't like to listen to other people's opinions because they only have their opinion. I listen, I keep an open mind, but there's a lot of things I disagree with out there, right? Okay, so they're telling me how great the economy is. Economy is great, right? I mean, it's growing at 3%. Let's use rough numbers here. I can teach this math to a fifth grader, but let's say we have a $30 trillion GDP GDP, right? That's the GDP, and it's growing at 3%. Well, how much is that? It's growing about 900 billion a year. Okay, well, that means we're in a great economy, right? No, we're not in a great economy because we're printing 3 trillion a year to get that 900 billion. So let's just call it 1 trillion. It goes up. All right, we print 3 to get 1. That is not a great economy. That is a fake economy. Now, here's the thing. Now, I was listening to this podcast, and they're saying that we have capitalism. Let me tell you something. When you print $3 trillion that you do not have and throw it out there into the economy, that is not capitalism. That has nothing to do with capitalism. Where's the money go? Well, it goes to the banks, the corporations, right? The people closest to the money get the most money. It's called the Cantillon effect. Now, who's closest to the money right now? Well, it's Elon Musk. Now, Elon Musk has been the biggest beneficiary of printing of money, right? I mean, the printing of money is going to make him the first trillionaire. He's going to become the first trillionaire. In my opinion, he'll be the first one. Why? Because he's closest to the money. He's got the president purse strings, right? He's got the president to outlaw any regulation he wants. So he's closest to the money is Elon. And Elon, the reason he's the richest man in the world is because just in the last 10, 15 years, we printed $30 trillion. $30 trillion. Now, where'd that go? A lot of it went into Elon's pockets. So Elon got very wealthy by the printing of money. He also got very wealthy by government subsidies, right? You buy that electric car, here's a government subsidy. Billions and billions of dollars in government subsidies. So what do we do with Elon? We put him in charge of the Doge boys. He's in charge of, bringing down government spending, right? I mean, isn't that funny to anybody? Does anyone see the irony in that? I don't know. I think it's kind of humorous, but Elon is probably the one that has benefited the most from the printing of money. But this guy that's telling me that we have capitalism and that the printing of money, he's saying it benefits everyone. And I would beg to differ with that. It does not benefit everyone. It benefits everyone that has assets, that has gold, silver, that has real estate, that's in the stock market. Those people get benefit because their assets go up, go up, go up, go up, right? Okay, now the person working paycheck to paycheck, like 60% of our country does, paycheck to paycheck with zero assets, they get hurt. And they get hurt real bad. Why? Because the cost of everything they have to buy goes higher and higher and higher. Now, he went into an elaborate thing that these people could lift themselves up by the bootstraps if they just know how to save money. Well, there's nothing to save you if you want to eat, right? Okay, so they're eating costs. They have families. Let's say they got a wife and 2 kids and they're making so much money, but their bills are going up, but their income's not going up. They're getting hurt because of this inflation, because of this printing of money. They cannot get ahead. Now, granted, I could teach a whole course in financial education. The reason they're probably going to stay poor is because they're trading a limited resource, which is their time, right? They're trading their time. They're trading that for money. Now, what is money? Money is the fiat dollar, right? So they trade their time for the fiat dollar. Now, that money starts going down as soon as they get it. Why does it start going down? Because we're printing money, right? And what do they do with those dollars? They go out and buy stuff. Like, let's say they go out and buy a car because their car is broken. Their car is 20 years old. They need a new car. So they go out and buy a used car. So they buy it with the depreciating fiat currency. They buy the car, which depreciates faster than the currency depreciates. And this is keeping them poor forever, right? Okay, so now here's the thing. If you can make a shift, right? You make a shift. You make a mental shift, right? You're working for money, right? Your limited resource is your time, and you're trading that for dollars. Now, as soon as you get those dollars, you got to take part of it. You got to take part of it. I don't care how you do it. You just take part of it. Let's say it's $30, right? Let's say out of each paycheck, you got $30, and you go buy an asset, and the cheapest asset on the planet is silver, right? Silver. So for $30, you go buy an ounce of silver, and you tuck that away. You just hide it. You don't look at it. that. You don't spend it, but that's going to start going up for you, right? It's going to go from $30, 40, 50, 60. It's going to start going up for you. So you have an asset that's going up. Why is it going to go up? It's going up because they're going to print the money. But Mike, silver's manipulated. Everybody knows that. And that's why I buy it. It's so cheap right here. When it gets done being manipulated, it's like it's spring loaded, right? Push the spring down, 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 then take your handle, and it's going to explode higher. And that's what silver is. Cheapest asset on the planet. So you get some of it, you stick away a little bit of your paycheck, and then maybe you got it, 5, 10 coins stacked away, 20, 30 coins stacked away. All of a sudden, you got 100 coins stacked away, right? And all of a sudden, they went from $30 up to $200. Now, people say that's not possible. And I'm going to talk about that in a second, that it is possible. But you got a problem here. You got $30 trillion, right? And so you're printing it's growing at 3%, that 30 trillion, GDP growing at 3% a year. So they're printing 3 times that amount. So we're already in a recession. We're going into a depression. If you don't print money, the whole thing stops, and we're in an instant depression. But let's talk about the silver thing. Once again, I listen to these podcasts because I just love this stuff. I'm obsessed with this stuff, and maybe you are too. Not many people listen to Tall Mike, but you're one of them. And I'm going to tell you some things here. So let's take a look at silver. Now, if you go back to just 2011 took 36 ounces of silver to buy just one of the S&P, okay? One of the S&P, 36 ounces, you could trade it for one of the S&P. Where's the S&P at today? Well, it's at what is it, 6,000. Okay, S&P went up to 6,000, right? Okay, so at 6,000, anyways, you divide by those 36 ounces, which I think it'll go back to, you get $169, $170, let's call it. $170 silver. Now, here's the thing, the stock market, way overinflated. I'm not saying it can't go higher. I think they're going to push the S&P up one more time to a new record high. I do think it's going to top out here. Top out maybe January, maybe the first week of February, but it's going to top out. But they're going to still push it one more time, right? Okay, but it's way overinflated. I mean, Buffett indicator 210%, 100 is normal. So that S&P might go from 6,000 down to 3,000. And that silver is so depressed down here at $30. It might shoot up to $170. It just might. Now, that's the way you get out of this vicious debt cycle that you're in. You're in debt, you work, you're a working slave, you work paycheck to paycheck. Just take $30 out of one of those, go buy 1 ounce of silver, stick it aside. I think you're going to like the outcome of that. But here's what the guy was saying. Well, I don't agree with this podcast either. He's saying to save up, and he's saying that to save up and to buy a house, you save up with the metals. I agree with that, right? You take a little bit, buy the silver, take a little bit, you're putting away the silver to trade it into the real estate. Because real estate's way overpriced too, but he's saying, it's going to come down. It's been coming down in terms of real money, down about 40% already in terms of gold, right? But in terms of nominal term, no, it's flat, right? Because they print money to keep it up there. But the guy's saying it's going to take you 25 ounces of gold and 1,000 ounces of silver. If you save that, you can put them together and you can go buy your average price home. Now, he's still living in the system. You see, he still thinks that this system's going to work. He still thinks this system's going to be around for a long time. I totally disagree with that. This system is going away. The dollar bill is going away. It's going to zero purchasing power. Now, the real money, the gold and silver, is going to start to skyrocket. I'm telling you, I think it's going to be, let's just call 1,000 ounces of silver to trade for the average price home. I actually think it's going to get down to 500 ounces. Got down to 800 ounces in 1982. It was 800 ounces of silver for the average price home, right? And then they printed money. We've been printing money ever since. But once the system breaks, it's not going to take you 25 ounces of gold and 1,000 ounces of silver to buy the average price home. No way. Maybe it'll take you the 1,000 ounces of silver and you just pocket those 25 ounces of gold if you're a stacker. And those 25 ounces of gold, man, you might be able to buy the whole block stock. We'll see how that all works out. But that's what my take. My take is that the system's broken. The system's going away. When we usher in the new system, that's when the silver is going to be exploding higher. That's when 500 ounces, maybe 1,000 ounces, but somewhere between 500 and 1,000 ounces of silver is going to go to, you can trade it for the average price. So once again, just my take. And if it doesn't happen, you're stuck with all that silver, and that's just a terrible thing to be stuck with too much wealth. If you like this stuff, give me the thumbs up. I'm Tall Mike. Get out there, everybody. Enjoy the day before you go. Punch that subscribe button. Punch the subscribe button because I want to talk to you later on. Bye-bye now.